Yes, sir.
Yes, sir.
Right. So after this class, you have to do one thing. You have to just go through the PYQs of the RBI Grade B. Just go through PYQs. You will find that there are the 4 sections, as these are the things which you don't know. If general awareness part is the most prominent important part. Most important part is the general awareness, and that is also very much defined by the commissions itself, that the current affairs last 6 to 8 months, especially one word, one liner will be the much important one, and economy section, that is the enough for that. Indian economy and budget 2025 highlights. I am going to provide everything to you, don't worry. RBI function, monetary policy, banking awareness, everything we are going to cover. Government schemes and policies, international reports and indices, financial awareness, SEBI, NABARD updates and all that. SEBI, NABARD and updates is not that much prominent, but still we have seen that what is SEBI and its function, what is NABARD and its function, and what are the new rules it's been added in the NABARD or something. We will look upon that briefly, these 2 topics also. And then the static GK also comes sometimes, countries, capital, important days, sports awards and all that. Fine. So we will cover this all things very much briefly, and I will provide you notes of every topic. So don't worry about the notes, that from where you have to complete the things. In the second section, that is the sitting arrangement reasoning, puzzles, inequalities, coding, decoding, data sufficiency, and logical reasoning and statement-based question. These are the topics where so many of the practice you need to do. So today you have to go and look upon the PYQs, of reasoning and mathematics. These 2 topics. From today itself, you have to do one thing. Whether you want to solve the question or not, it doesn't matter. Whether it takes 1 hour to solve one question, it doesn't matter. But from now to the examination date, I want your 100% commitment towards what I am going to say. If you can do that, I guarantee you that you will feel confident in your examination. So these are the very important things which you have to do. What you have to do from the PYQs, you have to solve 5 questions from reasoning and 5 questions from maths. Just 5. Only 5 questions from reasoning and 5 questions from maths. 5 question means, it doesn't mean that you should solve one sitting arrangement and it has 5 questions. No, if you are solving sitting arrangement, then you should solve 5 sitting arrangement, which means it has 5, 25 questions. Means you have to solve 5 sitting arrangement questions, different sitting arrangement questions. Understood? Yes.
Yes, sir.
Quantitative aptitude, you have to solve 5 questions from the quantity aptitude. Okay, you can choose any part which you seems that it is difficult for you to solve. And how we are going to approach, suppose that if you have done questions, anything, one sitting arrangement you have done, one puzzles you have done, one inequalities you have done, right? One coding decoding you have done. Suppose that in maths you have done data interpretation in quadratic equation or something, probability permutation or combination. Then you will share that particular question with me if you didn't understand that how that question can be solved, to my Telegram ID today itself. If you are going to share me tomorrow, I am not going to entertain that. And sharing today itself will show that how serious you are for this examination and how much you are doing the things which I am going to say. So 5 questions from reasoning and 5 questions from maths. If you do not know how to solve that, if you do not find the correct answer, then you just share that to me. I am going to resolve that question in the class itself. Okay. How this is going to happen? How this will help? This will help to cover the things quickly with perspective of your need. We can focus on the things where you are weak. If something is there, suppose that if something simplification question is there, 5 into 3 divided by 7 by 8 into 5 into 19 minus 6, something like this type of question can be asked in the RBI grade B mathematics section. We don't need to do this in the class, because you know how to do this kind of things. So why we are wasting time to solve this simplification? Rather than giving times to the simplification, when we can give the time to other part we can give time to the sitting arrangement, we can give time to the coding decoding, we can give time to the logical reasoning statement based question. That is going to be much beneficial because here we can learn how we can solve it. Everything in reasoning and quantitative aptitude, everything is upon how you are going to practice this. I am here to show you the right path, that yes, this is the way, this is the question, you will think this type, then you can solve this easily or in the limited short period of time. Okay, so that is why if you do not get the solution of your question which you are solving in the class or after the class, share me that question's photograph, that yes sir, this question I tried but I didn't get the answer, even I tried hard. Then I will discuss that in class itself. Okay, it doesn't matter whether I am taking GS class or RBI topic or any static GK. We are one by one goes complete, because reasoning, quantitative aptitude, these topic are not be completed in 4 days, right? We will take it with the from the tomorrow itself. You will send the doubt, I will clear it. You will send the doubt, I will clear it. You will send the doubt, I will clear it. And after GA, obviously, I will take the reasoning session also, quantitative aptitude session also. And yes, in the end, we will take the English language. But solving your queries from the day one will enhance your preparation. Got my point?
Yes, sir.
Yes. So do not forget to solve the 5 questions from the reasoning and 5 questions from the maths. If you can do more than 5, then you are most welcome. You can do and send me the questions. I will be very glad to solve that questions in front of you in the live classes. Do not underestimate the power of the practicing the question from day one. I am here to get you confident in examination, and what I need to do, I will do. But you should also have to show your strength. You should also have to show your declination, dedication towards the RBI Grade B1 examination. If you will not show that dedication, if you will not show that urgency, I'm not going to do that. So you have to put your 100%. Then only I can give my full support to you. Fine. So that is why it is important to do the homework. I am not going to repeat this in different class again. This is the mandatory things which you have to do daily. I am not going to say this again and again in the class. Fine. Is it clear?
Yes, sir.
Fine. So in this math section, reasoning section and GS section, these are the topics. And lastly, we will see the English language, where vocabulary, parajumbles, close test, error detection, and reading comprehension are the things which we are going to. And I am going to give you this from tomorrow itself. We will not wait for the last day. I want you utilize your 8 hours to 10 hours from tomorrow itself, even from today itself. If you have any practice bank, start from that. Start from that. Okay, but do that. Whatever the queries you have, just send me to the Telegram ID, to my Telegram ID, which is already posted in group, I think so. Otherwise, if it is not posted, then I will share that in the group, and just follow that, what I am going to say. Fine. So moving towards the next things. So today's topic is Reserve Bank of India. Actually, exam, we are going to give the exam of RBI. So RBI is the most important topic for our preparation. So this is all about RBI. What is the RBI is, what are the objective, history of RBI, how it is working, right? Everything we are going to look upon in this session. I am going to provide these notes in the class itself, so don't worry about that, in the group itself. So RBI, abbreviated as the RBI, Reserve Bank of India, is the central bank of India, meaning it is the apex body of Indian financial system. It is owned by the Union Ministry of Finance. ध्यान में रखना है, always remember, it is owned by. RBI is not a independent body. It is owned by the Union Minister of Finance. It acts as the regulatory body responsible for the regulation of the Indian banking system, as well as the control, issuing and maintaining money supply in the Indian economy. What are the objectives of the RBI? To regulate the issue of banknote, to maintain reserve with a view to securing monetary stability, to operate the credit and currency system of the country to its advantage, to maintain price stability while keeping in mind the objective of growth. So tell me one thing, do RBI issue each note? Each currency note? Do RBI issues each currency note? Tell me. Yes or no?
No, sir.
How?
Means you're talking about printing of the notes or issue of the notes, sir?
Yes, means issuing of the notes.
Yes. Sorry, sir, I have no idea about it.
Okay, who issue the rupees 1 rupee note?
Rupee 1 notes are printed by the RBI but issued by the Government of India.
Issued by the Government of India, right? So this kind of question can be asked, and it's been asked in the RBI examination earlier. So to maintain reserves with a view to securing monetary stability, what do you mean by monetary stability? Do you know this term, monetary stability? This is the economy term where we can understand that monetary stability means how much currency note are in India and how much it is needed to be flooded in the country, right? That is the securing monetary stability by the RBI. It depends, it decided by the RBI only that how much notes should be in the market. That is the monetary stability, and that depends upon the too many things such as the SLR, CRR, repo rate, bank rate, everything. It depends upon the various factors. Then only RBI decide to what number of notes for a particular currency, 500 rupees, 100, 200, should be in the market. Okay. So that is what the monetary stability is all about. To operate the credit and currency system of the country to its advantage, to maintain price stability while keeping in mind the objective of growth, Now the history of RBI. The Reserve Bank of India was established to tackle the economic turmoil that occurred after World War I. The timeline of origin and evolution we have seen. 1926, the Royal Commission of Indian Currency and Finance, also known as the Hilton-Young Commission, recommended setting up a central bank for India. You will get the question that which commission has recommended to setting up a central bank for India. That is the Hilton-Young Commission. Remember this, Hilton-Young Commission. Do one more thing. If you are attending live classes, then make running notes of these classes with yourself. Such as how you are going to make the running notes. Just write it down in a notebook. 1926, Royal Commission, right? Royal Commission on Indian Currency and Finance, Hilton-Young Commission recommended setting of central bank. Just make it a quick notes of it, okay? So that you could revise multiple times that notes. 1934, the Central Legislative Assembly accepted the recommendation and passed the Reserve Bank of India Act 1934, which provides a statutory basis for the functioning of the bank. Okay, so a statutory basis for the function of the bank. When it happens, it happened in 1934, and the Reserve Bank of India Act 1934 has formed in that era. 1935, as per the provision of the RBI Act, the RBI was established in Calcutta and commenced its operation on 1st April 1935. So it established in Calcutta. Remember this also. If you feel any confusion or have any queries, then you can message in chat box. I will look upon that and I will clear that. Right now. Okay, 1937, the RBI was permanently moved from Calcutta to Mumbai, where its current central office is located. So 1935, it is established in Calcutta, and 1937 is shifted from Calcutta to Mumbai, where its current central office is also located. 1949, the RBI, which was held by private stock stakeholders till now, was nationalized. So when did the RBI nationalized? It nationalized in 1949. So you may get the questions, is RBI is nationalized from the beginning? No, it is not nationalized from the beginning. It was in the private hands before 1949. So it was nationalized in 1949. Important, India was the first British colony to have its own central bank. Remember this. India was the British colony, ruled by the British. So this was the first British colony which have its own central bank. What does this denotes? Can anyone tell me? What does this denotes? Having its own central bank in the colony of British, what does this denotes? Can anyone have any idea? It means at that time, India is having so much strength and good economy that British needed a bank to handle that. See how strong we are at that time. Even Britishers need a central bank to organize its currency. Now comes the nationalization of RBI. The RBI, as established in 1935, was initially a privately owned entity. It means that its share capital was divided into shares owned by private individual and institutions. So, however, later the Government of India passed the RBI Transfer to Public Ownership Act in 1948. As per its provision, the ownership of RBI was transferred from private entities to the government. So this is called the nationalization of RBI, which transferred it from a privately owned entity to a fully government owned entity. So which act? That is the RBI Transfer to Public Ownership Act 1948. After nationalization 1949, it emerged as the Central Bank of India and no more remained a bank in the technical sense. Okay. Now the branches and the offices of RBI. Everyone knows that the main branch is in Mumbai, है main office and headquarters of the RBI. This is the office where RBI governor sits and its whole organization of the RBI is controlled from. Zonal office of RBI, 4 zonal office, Kolkata, Mumbai, Delhi and Chennai. East region represented by the Kolkata, West region represented by Mumbai, North region represented by Delhi and South region represented by Chennai. Regional offices of RBI, the Reserve Bank of India has about 22 regional offices which play a crucial role in the functioning of RBI at the regional level. These offices are mostly located in the capital cities of the states. So if you have seen RBI regional offices in your capital city of a state from where you have belong, if you can see in the Madhya Pradesh we have in Bhopal. When we are talking about the Chhattisgarh, we have in Raipur, and when we are talking about the Bihar, we have in the Patna, the regional offices of RBI. So about 22 regional offices. Other offices of RBI has other offices in prominent cities across India which perform a specific task like a specialized departments like rural planning or agriculture credit, training centers for bankers, and oversight of a specific financial institution. So these are the things which are the working pillars of RBI and done by these special tasks. These 3 tasks which are especially performed by the RBI. Now comes the structure. There are few questions asked from the structure of Reserve Bank of India also. That means it begins from the governor, then how it goes down, right? Deputy governor, executive governor, principal chief general manager, GM, general manager, DGM, deputy general manager, assistant general manager, managers, assistant manager, and support staff. These are the central board of directors of RBI, which we have to keep remember. Right? Organization structure. Who is the governor of RBI now? Do anyone know that? Who is the governor of RBI? No one knows.
Sir, Sanjay Malhotra sir,
Yes, it's
replacing Shaktikan Das.
yes. Right. So this is what it's already mentioned. Na? You guys can also read and answer it. Right. So this is the governor is the Sri Sanjay Malhotra. And deputy governors, there are 4 deputy governors: Sri M.R. Rao, Sri T. Ravi Shankar, and Sri Swaminathan J. and Dr. Poonam Gupta. From these 4, maybe we can see new governor of RBI in the later on. The Central Board of Directors is the main committee of the Reserve Bank of India responsible for its overall control and direction. It is 21-member body comprising the following members. Official directors, they include the Governor of the Reserve Bank of India, not more than 4 deputy governors for a tenure not more than 5 years. This is important points. Not more than 5 years. Non-official directors, they include 10 directors from various fields nominated by the Government of India for a tenure of 4 years. 4 directors representing the 4 local boards of the RBI, 1 director nominated by each of the 4 local boards, that is Mumbai, Kolkata, Chennai and Delhi, and then 2 government officials nominated by the government of India. So non-official directors are also how many? 10 directors from the various fields, which is nominated by the government of India for tenure of 4 years. These are the things are important. You can get the question directly from these things. So this is important part. Everything which I have mentioned in the PDF, it is important with respect to RBI. So do not forget to revise this PDF again and again. Local boards of RBI. The 4 zonal offices of the RBI are controlled by local board for each. Each of these local boards consists of 5 members who represent regional interests and the interest of cooperative and indigenous banks. So local boards of RBI. Okay? How many members? 5 members who represent regional interest and the interest of cooperative and indigenous bank. Means different kinds of banks. SBI, PNB, and there are different kinds of banks. Fine. Key facts about RBI. The first governor of the RBI was Sir Osborne Smith, 1935 to 37. The first Indian government of the RBI was C.D. Deshmukh, 1943 to 49. But tell me one thing, when the RBI nationalized, who was the first governor general, governor Indian, first governor of RBI? Who was the RBI governor when the RBI got nationalized? In which year the RBI got nationalized?
1949.
1949. So during that time, who was the governor? C.D. Deshmukh, right? Manmohan Singh is the only Prime Minister of India who till now has also served as the governor of the RBI. And the emblem of the RBI is a tiger and a palm tree. The Reserve Bank of India has 4 fully owned subsidiaries, which was the Deposit Insurance and Credit Guarantee Corporation, DICGC, Bharatiya Reserve Bank Note Mudran Private Limited, BRBN MPL, where notes are being printed, Reserve Bank Information Technology Private Limited, REBIT, and Indian Financial Technology and Allied Service, IFTAS. These are the key facts about RBI which you have to remember. Function of our Reserve Bank of India. Major function of the RBI can be seen under the 2 following heads. Monetary function of RBI. So monetary function of the RBI is what? Actually, it includes those functions which are connected with the money and money supply. Right? Money and money supply. So this is important to understand the economy section also. So issuer of banknotes, the Reserve Bank of India has the monopoly of issuing currency notes except for 1 rupee notes and coins. Also, coins is not issued by the Reserve Bank of India. The 1 rupee note and the coins of all denomination are minted and issued by the government of India. Not the RBI, but they are circulated by the RBI. They are circulated by the RBI, but printed and minted by the government of India. Rupee 1 rupee note and the different kinds of currency. So the RBI issue currency notes under a system called minimum reserve system. RBI issue currency notes under a system called minimum reserve system, that is the MRS. Fine. Next comes the bankers to the government. The RBI act as a banking agents and financial advisor to the central as well as the state governments. In this capacity, the RBI manages government accounts and treasuries, keeps deposits of the government, lends to the government without any interest for the short term, buys and sells government securities G-Secs on the government's behalf. We are going to discuss the G-Secs in the coming classes also. G6 are the safest investment plan for the citizen. And government securities, what is that? Actually, government needs some money, so they sell some bonds paper from their own, and it guarantees that when you will sell that bond paper, I am going to pay. So government securities on the government behalf, RBI buys and sells that. We will discuss about that in the later class. Give monetary and financial advice of the governments. That is also one of the role of RBI. Bankers Bank. The RBI is the bankers of all scheduled commercial bank (SCBs). In this capacity, it performs the following function. What are that following function? Keeps the reserve banks in the form of cash reserve ratio (CRR). Provides financial assistance to bank against mortgage securities and rediscounts bills of exchange. These are the things where banks RBI is working like. Okay. Do you have any idea about the CRR?
It is the amount of money which should be kept by all banks in the RBI.
Very good. Very good. Very good. Actually, for those who do not understand, let me explain that. Actually, the CRR, that is the cash reserve ratio, is a key monetary policy tool. It is a key monetary policy tool which is used by the RBI to regulate liquidity and ensure financial stability, which means it refers to the portion of a bank's total deposits that must be maintained as cash with the RBI without earning any interest. They don't get any interest on the CRR. Remember that. Fine? That is very important. So that is the CRR. Now, lenders of last resort. It also acts as a lender of last resort for the scheduled commercial banks. Usually, banks and other financial institutions borrow and lend among themselves to meet their financial need. But in times of crisis, the SCBs approaches the RBI to get financial assistance. Okay. So whenever bank need any kind of help, there is the RBI, lender of last resort. This bank can go and approach the RBI for the help, and RBI is going to help that bank. Custodian and manager of foreign exchange reserve. What is foreign exchange reserve? Do you know anyone? Do anyone knows about that?
No, sir.
Okay, let me know. Let me tell you. Foreign exchange reserve. Fine. What does that mean? We can also say FX reserve. So foreign reserves are assets. Assets means gold. It can be in gold. It can be in dollar. It can be in pound. Right. So these are the assets held by National Central Bank. Means RBI or monetary authority in other countries. Right. So primary in reserve currencies such as the US dollar with a smaller portion in the euro, Japanese yen and pound sterling. When we are reserving another country's currency, that means that is the foreign exchange reserve for our country. So we are reserving now US dollar maximum US dollar, and then we have some small portion of euro also, Japanese yen also, and pound sterling also. Why? Because this is easy to do the trade with this particular countries. But now India is doing trade in the Indian rupee also. And we have seen that some in the news we have seen that our forex reserve has increased by this, and 6 to 5 billion dollar, the forex reserve. And we will see this everything in the coming classes. Fine. So that is the forex exchange reserve. So custodian and manager of foreign exchange reserves, in order to stabilize the external value of India currency, the RBI maintains the reserve of foreign currencies to establish the exchange rate. This function of RBI also helps promote international trade, right? Controller of credit or money supply. Obviously, RBI is the controller and the credit or money supply. So it uses its monetary policy tools to control the volume of money supply according to the economic situation of the nation and all that. This helps in controlling inflation and deflation and hence establishing the general price level in economy. What do you mean by inflation? Can anyone tell me?
The rise of cost of the goods in the market, sir.
Yes. Actually, rising the price of goods is considered as the inflation. And what is deflation?
No idea, sir.
No idea.
Means it's opposite of inflation, sir. Means
Yes. Actually, it is little bit. Suppose that deflation, when you know about the inflation, because you have seen regularly in the news, but deflation is something we do not see regularly in the news. So it is also an economic condition which is characterized by the sustained decrease, right? Sustained decrease in the general price level of goods and services. Suppose that it occurs when the inflation rate falls below 0%. Right? Inflation, you can also call inflation is minus 2%. 2%. So that means you can also say there is a deflation of 2%. Got it?
yes, sir.
Yes. General function of RBI. The general function of the RBI include functions related to general regulation and promotion of the banking system so as to maintain the health and growth of the banking system in the country. Major functions include in this category are as follows. Regulator of the banks, the RBI Act of 1934 and the Banking Regulation Act of 1949 entrust the RBI with the power to regulate the banks in the country. In this capacity, the RBI performs functions such as licensing banks, prescribing minimum requirements of paid up capital and reserves, etc. Next comes the promotional functions. The RBI works towards and the promotion of the Indian financial system through functions such as enabling expansion of the commercial banks in terms of their branches in the country or abroad, promotion banking habits of people, promoting financial inclusions, consumer education and protection, and promoting Digital India initiative in financial sectors and all that. Right? Digital India means we have also seen that e-rupee. We have seen the UPI system like things that comes in the Digital India initiative in financial sector. So these are the promotional functions of the RBI towards the promotion of the Indian financial system. Fine. Now comes the currency notes printing and coins minting in India. Currency notes are printed in 4 presses in India, that is the Nasik, Maharashtra, Dewas, Madhya Pradesh, Mysore, Karnataka, and Salboni, West Bengal. So these 4 areas are the places where currency notes are being printed. Of these, Nasik and Dewas presses are owned by the government of India whereas Mysore and Salboni presses are owned by the RBI through its wholly owned subsidiary Bharatiya Reserve Bank Note Mudran Limited, BRBNML. Fine. Coins are minted in 4 mints located in Mumbai, Hyderabad, Calcutta, and Noida. All the 4 mints are owned by the Government of India. As per the Indian Coinage Act 1906, coins can be issued up to denomination of Rs 1000. 1000. Government of India can issue a 1000 rupee coins. As per RBI Act of 1934, currency notes can be issued up to denomination of 10,000. So do not get confusion if you see the question that what is the maximum denomination of rupee RBI can print. So if generally we are seeing the 500 rupee, na? Or mostly you can think about the 2000 rupee note. But no, that is the 10,000 rupee notes. It can be denominated by the RBI. And 1000 rupees coins can be sent by the under the Indian Coinage Act. The 1 rupee note is the only currency note which bears the signature of the Finance Secretary of the Government of India and not of the government of RBI. And all other notes bear the signature of Governor of RBI. Okay? 1 rupee note has the signature of Finance Secretary. Who is the Finance Secretary of Government of India now? Tell me. No one knows.
No, sir.
Ajay Seth. He has taken charge in March end. In March end, he has taken charge. I think. Yes. है ना? Now, minimum reserve system, MRS. In 1957, the RBI adopted the minimum reserve system for issuing currency notes. As per this system, to issue money, the RBI maintains gold and foreign currency reserve of worth 200 crores as backup. 200 crores as backup. है ना? This is the minimum thing. Minimum. Gold and foreign currency reserves that RBI can keep as backup. Note, out of these reserves, a minimum of 115 crores should be in gold. है ना? In 200 crore no currency, minimum 115 crores could be in gold. Now, what is the gold reserve India have? Any idea? No idea.
Why this?
It is around 879 ton. 879 tons. In currency, what could be? It could be. It could be suppose that a tons means 879 this kilo, right? And we can put this much. So this is the account money India have as rupees. How much rupees this is? Eight lakh 79,000 crore rupees India has now as a gold reserve. Now comes the publications of RBI. So RBI from time to time conducts various surveys and publishes various reports to gauge the pulse of the economy. Some of the major publications of the RBI include Financial Stability Report half yearly, Monetary Policy. What is the Financial Stability Report? It reflects the collective assessments of the risk to financial stability and the resilience of the financial system. The report also discusses issues relating to the development and regulation of the financial sector. That is the Financial Stability Report half yearly. Next comes the Monetary Policy Report half yearly. It is published by the Monetary Policy Committee MPC of the Reserve Bank of India, and it plays a crucial role in determining the policy rate required to achieve the inflation target. Fine. Do anyone knows about the Monetary Policy Committee? No one?
No, sir.
Fine. I will discuss here. Don't worry about that. Okay. So what does that monetary policy means? First of all, understand that Monetary Policy Committee is a committee entrusted with task of fixing the benchmark policy rate. Benchmark policy rate, which means repo rate. And what is repo rate? We are going to understand that also. So required to contain inflation within the specific target level. So that is the major role of the Monetary Policy Committee. Fine. So suppose that use of the monetary instrument, they use monetary instrument under the control of the central bank to regulate the magnitudes such as interest rate, money supply, and availability of credit with a view of achieving everything. So RBI here is the vested with the responsibility of conducting monetary policy, which is already mentioned in the RBI Act 1934. And the primary objective of the monetary policy is to maintain price stability while keeping in mind with the objective of growth, because the price stability is necessary precondition to sustainable growth and all that. Okay, so that is the work of Monetary Policy Committee actually. And what is the composition? When we are talking about the composition, the monetary policy committee has 6 members. 6 members, right? What are they? Chairman would be the RBI governor. RBI governor. The RBI deputy governor, then other person in charge of monetary policy. Deputy governor, who is in charge of monetary policy, and official nominated by the RBI board also will be the person, and the remaining 3 members would be represented the government of India. Government of India. Okay. So after this, the quorum for a meeting, quorum is the particular number of members should be available, then only the meeting can be run. The quorum for a meeting shall be 4 members. So at least one of whom shall be the governor, and in his absence, the deputy governor, who is the member of MPC. Okay. And one more thing, the decision of MPC, means Monetary Policy Committee, would be binding on the RBI. Binding on the RBI. Am I clear till here? Is it clear, everyone?
Yes, sir.
Sir.
Good. Fine. So there are 6 members. One is the RBI governor, chairperson. The other one is the RBI deputy governor in charge of monetary policy. Next one, the one official nominated by the RBI board. And the remaining 3 members would represent the government of India. The quorum is the 4 members, and the decision by the MPC is the binding on the RBI. Fine. And the MPC also, one important aspect is also that the MPC is required to meet at least 4 times in a year. These are the important things related to MPC, Monetary Policy Committee. Fine. Next is the Consumer Confidence Survey, quarterly. It complies qualitative response from households regarding their sentiments on general economic condition, overall price situation, employment, income, spending scenario, etc. Next is the Inflation Expectations Survey of households, quarterly. It complies qualitative response from households on price change as well as prices of specific product groups in the next 3 months as well as in the next 1 year, and quantitative response on current 3 months ahead and 1 year ahead inflation rates. So the result of this survey is used as one of the important inputs for the formulation of the monetary policy. So that is the quarterly inflation expectation survey of household. Next is report on foreign exchange reserve. It is done in half yearly. It contains the developments regarding movements of foreign exchange reserves, information on the external liabilities, vice the reserve, adequacy of the reserves, objective of reserve management, statutory provision, risk management practices, and the information on the transparency and disclosure practice, etc. Next is the Digital Payment Index, DPI. It captures the extent of digitization of payments across the country, which are the RBI DPI is based on 5 broad parameters. Digital Payment Index, fine. Payment enablers, payment infrastructure demand side factors, payment infrastructure supply side factors, and payment performance and consumer centricity. Fine. Do you know about the Digital Payment Index? What does that mean? Anyone knows about that?
So,
And now the things which I am not mentioned, which is not mentioned in this PDF, now I am writing it down. So I will request you, you should also make the notes of that particular things in your notebook. I know. So now it is the RBI Digital Payment Index, DPI. RBI DPI reached 493.22 in March. You can get questions from this, which reflects what? Which reflects significant growth in the digitization of payments across India. 493.22. Just mark it down. This is very important aspects. So RBI DPI is a composite. Actually, what is RBI DPI? Digital Payment Index. It is a composite index created by the RBI to measure the extent digitization of payments in the country. And when does it first issue? It was first launched in, I think, January, yes. It was launched in January 2021. Yes, it was launched in January 21 first time. With the March 2018, yes, 2018, with March 2018 as the base period, score of 100. So this will be the question, है ना? What is the, when it was launched? So it was launched in 2021. What is the base period? So March 2018, it was the base period. Okay, so and the index published semi-annually, capturing the growth and penetration of digital payment methods over time. Fine. Semi-annually. It published semi-annually. Clear? Understood what is digital payment index?
Yes.
Okay. Now comes the incomes and expenditure of RBI. RBI's incomes. Most part of the RBI income mainly comes from its operations in financial markets. So they include incomes from buying or selling foreign exchange, incomes from open market operation to prevent the rupee from appreciating. And what is now open market operation? That is also important aspects. Open market operation. Have anyone any idea? Mostly you people do not know about that. So let me discuss about that open market operation. So OMO, open market operation. What does that refer? So it refers to the activity conducted by central bank such as federal bank in other countries and the RBI in our country to buy or sell government securities in the open market. Buy and sell government securities in the open market. So this process is primarily tool used to implement monetary policy and manage the economy liquidity. Okay, so this is the base things regarding open market operation, OMO. Income from government securities it holds, returns from its foreign currency assets that are investment in the bonds of foreign central bank or top rated securities, and return from deposits with other central bank or the bank for international settlements, return from lending to banks for very short tenures, and management commission on handling the borrowings of state governments and the central government. These are the most part of the RBI income mainly comes from its operations. Fine. Next comes the RBI expenditure. Major components forming part of expenditure of the RBI include expenditure on printing of currency notes, salary of its staff, giving commission to banks for undertaking transaction on behalf of the government, and giving commission to primary dealers for underwriting some of those borrowings. So these are the places where RBI paid. RBI surplus. The RBI total expenditure is only about 1/7 of total net income. The difference between RBI's income and the expenditure is known as RBI surplus. Out of its total surplus, RBI holds some amount of to itself as equity capital to maintain its credit worthiness and pays the rest to the government. Rest payment is done to the government. RBI do not hold all amount to itself. Now comes the autonomy of Reserve Bank of India. As the Central Bank of India, the role of the Reserve Bank of India is crucial in promoting financial stability and economic growth. Thus, it must have a significant degree of autonomy in its functioning. However, some factors seems to hamper the autonomy of the RBI. These factors, the suggested way ahead, are explained in the section here. These sections are important to revise. Factors hampering autonomy of RBI. The colonial era RBI Act of 1934 provides the government sweeping powers to control the RBI the way it wants. For example, section 30 of only these sections you have to remember. Section 30 of the RBI Act allows the government to supersede the RBI central board. Okay? Section 58 circumscribes the powers of the central board to make regulation only with the previous sanction of the central government. This is the section 52. Section 30 what? That the RBI Act allows the government to supersede the RBI central board. Means government of India can supersede what RBI central board had decided. That deals under section 30. Section 58 circumscribes the power of the central board to make regulation only with the previous sanction of the central government. And next comes the section 7.1 says that the union government can give direction to the central bank after consultation with the RBI governor in the public interest and all that. Fine. Next is, according to reports since independence, 7 out of every 10 RBI governors have been former finance minister official. This raises the question of the independent functioning of the Reserve Bank of India. The Central Board of Directors, the highest decision-making body of the RBI, consists of 21 members, of which 12 members are nominated by the union government. This gives the government a large say in the functioning of the RBI. So the government frequently asks the Reserve Bank of India to ease lending rules under its Prompt Correction Action (PCA) framework. Prompt Correction Action (PCA). What does that mean? It means that by that rule, the lending rate, repo rate, bank rate can be changed, can be made suitable during the time which is needed. Fine. So framework, as it could help reduce pressure on MSMEs and power companies through credit availability. The jeopardized the RBI effort to deal with the country's non-performing assets NPA crisis. So the issuing of increasing RBI surplus transfer has been also hampering the autonomy of RBI. That is what factors hampering autonomy of RBI. Clear? Any doubt till now?
No, sir.
Fine. So this is all from today's class. Tomorrow we are going to deal with the other most important part, that is monetary policy and banking awareness. We will see tomorrow, and we will also see